If you're a long-term investor and still buying stocks at this level, I first just want to say congratulations. Unfortunately, right, if we look at our portfolios, we were like, congratulations for what? But for me, in first-hand experience right now, I keep hearing stories about how us, the typical retail investors, are either selling out of stocks right now or not planning on buying anytime soon. And unfortunately, this is, I want to say, probably the worst time to even think about selling stocks, or the worst time to think about not buying. Unfortunately, most retail investors tend to buy at the high and tend to sell at the low. So in today's episode, I want to take a quick look at 4 stocks I'm thinking of adding this week. Like many of you, I put money to work on a weekly basis trying to add to my account. And especially with prices right now, I'm trying to find ways to kind of increase my income so I'm able to invest a little bit more than the week before. So if this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's get started. All right, so the first stock we're going to start off with is going to be one of the giants, Microsoft, and we can see from its 52-week high, the stock is down roughly 20%. And this is insane for such a big company with such a great kind of product and financials. If we take a quick look why I'm liking Microsoft right now, it's very, very simple. I mean, take a quick look at their most recent earnings report. All of their 3 major segments grew revenue double digits, especially in the clouding market. The clouding market grew 26%. If I take a quick look at Microsoft, to me, this is probably one of the perfect examples of a big tech that is more like an ETF, right? You get kind of exposure into the clouding business. You get exposure into kind of the consumer market with their more personal computing. And then you also get exposure into like the business and enterprise with their productivity and business process. So Microsoft is like that one-stop stock that can kind of hit different markets at the same time. If we take a quick look at some forward PE ratios and forward AV to EBITDA ratios, we can see right now Microsoft's forward PE ratio is around 29.15. Not the cheapest, but again, I want to say it's not crazily overvalued for the type of growth and the type of finances you're getting with this company. Forward EV to EBITDA is about 20.22, and that's why Microsoft makes it on my list. This is one already in my portfolio and one I don't mind adding over time, increasing that exposure. The second company we're going to take a closer look at is one in the semiconductor industry, and this is one of my top holdings, one of my favorite holdings. Microsoft is actually also one of my top holdings. AMD, right now we can see from its 52-week high, the stock is down roughly 40%. And AMD is a provider of many different kind of chips. They do graphics cards, processors, both for the consumer market and for the kind of clouding market and enterprise market as well. They've recently done a few acquisitions with Xilinx, which kind of increases the solutions they provide to data centers, and they're also kind of acquiring Pensando, which is also going to increase the solutions for their kind of data cloud and data center market. I want to thank the Motley Fool for sponsoring this video and keep listening for this great offer we have for the community. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with the Motley Fool to bring you a discount for one of my favorite services the Fool offers, the Motley Fool Stock Advisor. Go to fool.com/Jose to sign up and get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor has been a market-beating service, so what are you waiting for? Thanks again for the Motley Fool. Now on to today's points. If we take a closer look at their most recent earnings, which they reported this past Tuesday, and make sure to check out the video, I did a more in-depth on that. Their Q1 revenue was up 71% year over year and 22% quarter over quarter. Some of that gain obviously came because of the new Xilinx acquisition, but what I'm super excited is, look, their computing and graphics segment, this is their consumer products, grew 33% year over year and is now sitting at $2.8 billion of total revenue. Then we have their enterprise, embedded, and semi-custom. This grew a whopping 88% year over year. And again, this is the market where I believe will continue to grow. And this was this was now $2.5 billion of total revenue. I do believe within the next 2 to 3 quarters, enterprise and embedded will eventually become the biggest portion for AMD's revenue. And I'm very, very bullish at that, especially like I mentioned with all the acquisitions that I mentioned. Now, if we take a closer look at kind of forward ratios, forward PE ratio for AMD is sitting at 21.7. Their EV to EBITDA ratio is sitting at 17.62. It does seem for a company that's providing huge technological improvements is sitting at a cheaper price than Microsoft. And to me, that's also very, very bullish. This is a company that's growing over time, and I do not see it stopping anytime soon. All right, so the next stock we're going to take a closer look at is Nvidia. And this is my favorite stock, my favorite company out right now, ticker NVDA. You know, I'm very bullish in the semiconductor industry, both for my education and for my past kind of work and career flow from. We can see Nvidia right now is sitting at $186, and I'm really liking this. This is a stock I haven't really added much into. One, because it's been my #1 position for a long time, and two, because it's one that I had huge exposure and I did believe valuation was a little bit high, and I was already happy with my positions. But we can see from 52-week high, the stock is down roughly 44%. Now things are getting juicy. Market cap of about $467 billion. This is a company that has yet to report earnings. They are expected to report Wednesday, May 25th, so about 3 weeks from now. But regardless, this is a company that hits numerous markets: artificial intelligence, machine learning, graphics, autonomous driving, you name it, software, hardware, infrastructure, they have it. If we take a quick look right now, Nvidia's forward PE ratio is sitting at about 33, right? This is in a few months ago, this was sitting at high 70s PE ratio. EV to EBITDA ratio sitting at 29.65. So I do believe this is a company that is going to be growing at faster, has better margins than AMD. So for that, it kind of deserves the better or the higher valuations compared to one of its peers. I want to say Nvidia is, to me, a company that in the next 5 to 10 years will easily double, maybe even triple in size if it keeps kind of going the direction it's going. The final company is going to be more of a dividend play, but at the same time also a semiconductor play. This is going to be Taiwan Semiconductor Manufacturing, a company that helps manufacture the chips for all these big players, AMD and Nvidia, and is currently the leader in this space with over 50% of the revenue market share. That is insane. One company has more than half of the market share for designing chips. Right now, from its 52-week high, the stock is down about 34.86%, and it currently has a dividend yield of about 2%. If we take a quick look at metrics again, if we take a quick look at PE ratio forward, it's sitting at about 15.78, and forward EV to EBITDA ratio is sitting about 9.398. I do want to say this is a company that's doesn't have the huge kind of catalyst that Nvidia or AMD could have, and for that it has a cheaper valuation. Regardless, I do think it's sitting at great levels right now. If we take a quick look at their most recent earnings, they still grew revenue by about 36%. They also did grow their net profit margins by about 2.7 percentage points, sitting at about 41.3. So these are the 4 stocks in my radar. Let me know what are some of the stocks you guys are planning on buying this week. And like I mentioned, congratulations if you're still kind of here as a long-term investor buying at these levels, because there's many people leaving ship right now, and unfortunately they might not come back, and that's the worst thing to do. So take care, have a good day, and see you next time.